Well, the Reserve Bank has hit pause, keeping interest rates on hold at 4.1% in line with market forecasts. RBA Governor Michelle Bullock revealing the bank is taking a cautious approach as global uncertainty continues to cloud economic outlook. Meanwhile, Donald Trump is set to unveil a wave of new tariffs, dubbing the moment Liberation Day. For more, let's bring in Mark Burris, Chairman of Yellow Brick Road. Good morning to you. OK, the RBA said they didn't even take into account the election being on, the campaign being on. What do you think will happen in the future about interest rates?
Well, the RBA has been pretty clear. She was pretty clear yesterday that a number of issues are outstanding, that she doesn't know whether or not inflation is going to go up or down as a result of the tariffs, which, by the way, Liberation Day is tomorrow. The big announcement is tomorrow, our time. Liberation Day being the day that global tariffs are going to be hit, and we may well get hit. She doesn't know whether that means prices will go up in Australia or will go down in Australia. And as a result of that, she can't make a call on inflation, and therefore, as a result of not being able to make a call on inflation, she's not prepared to make a call on interest rates.
Yeah, well, when we're sitting here thinking that, you think, well, if she doesn't know, well, we don't know anything, do we? So just on interest rates, when's your tip for another cut?
Well, I definitely think there's going to be an interest rate cut this year. 2 cuts, we're predicting 2 cuts. But I think importantly, I think in the May meeting, which is on about the 17th or 18th of May, they'll have the March quarter numbers. My guess is, and she said this, by the way, if she sees 2 quarters of low inflation, that's not the headline inflation, but the underlying inflation, that is below 3%, she will consider a rate cut. Now, she's already done one rate cut, and we've only had 1 quarter. That was the December quarter. But I think the March quarter will also deliver to us a low inflation number, irrespective of the tariffs. And I think at that point, she'll be somewhat forced to reduce the rates one more time.
At the May one or later?
No, the May meeting.
OK.
The May meeting. But there's a write on all that, Mel. Like, the big write on all that is that if this tariff stuff affects us badly, she'll just pull back and just wait. OK, so let's talk about the tariff stuff. What is it? It's happening in America, but how will it affect us? Well, one way you can think of it, it can affect us 2 ways, but both inflationary and deflationary. So if China, for example, this is all directed at China from the US. If China, for example, is no longer to be able to send stuff into the US because their pricing is not competitive, one of the places they could be dumping it is here in Australia, which might mean we get deflationary pressures. In other words, prices come down here, like cars, etc. Things could go down here as prices go down. But bear in mind, if China's not selling enough product, they're not going to be requiring as much as our resources.
Yes.
So we won't be exporting as much. So in the short term, potentially deflationary. In the medium to longer term, or mid-term to longer term, potentially inflationary. So it's a problem. Like, we don't know what's going on.
OK, what about people saying the US could go into recession? How will that affect our markets here? Because it's all kind of connected.
Yeah, well, if US goes into recession, so will we. So the rest of the whole world will. So, and by the way, we don't know what the retaliatory effects will be. So US increases their tariffs, Canada increases its tariffs, Mexico increases its tariffs, China increases its tariffs. Maybe we will too, I doubt it very much. UK increases its tariffs. So we've got a world of everybody sort of fighting a tariff war. And if we have something like a big tariff war, the whole world will go into an inflationary cycle. And that inflationary cycle will just create a massive amount of problems. And in the US, we're probably going to see, as a result of Trump's Doge program, a lot of people get put out of work. So we could have major unemployment as well. So this is a really messy period, really messy.
Yeah, it doesn't sound good, and it doesn't sound good for us too, because you think we're a long way away from it, but we're really connected through our super funds, even if you're not directly invested in the stock market. Yeah, our super funds are so heavily invested in the Australian stock market that they have to now invest in global markets, and they're now investing in the US market and have been for some time. They're massive, our super funds, and they have to spread their investment, diversify, so they go into the US. And if the US stock market starts to feel some sort of pressure, then our super will go down, and of course Australians get very nervous. Yep, OK. Thanks for trying to explain it. Thanks, Mark. Sherbo.